What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we closed at brand new all-time highs across the board, and yes, that does include the Russell 2000. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did close at another brand new all-time high, going up 0.4%, and that's the second day in a row closing above our price target at 460. So without a doubt, we're still seeing incredibly bullish price action, and we still do have the very strong bull trend. So as this bull market marches on, I do acknowledge that we are due for a pullback, but remember, you have to follow the price action. You can't get overly bearish just because the stock market's going higher, especially when you have bullish price action in the strong bull trend. So right now, look for that next price target up there at 465 because it looks like we're going to start marching towards that level. Obviously, if you start to see price action slicing back down through this 5 EMA, you still want to look for these lower support levels. And by far, the strongest support levels we're looking for will be 453, 450, and 448. The higher we go, the less likely we're going back down to 448 because as you can tell, our 20 simple moving average is now above that support level. So in all strong bull markets, our 20 simple moving average is always going to be a strong support level. And if that support level is above 448, there's a very good chance we don't actually pull back to 448. So the highest probability chance from these levels is that we're going to pull back to either 457, 453, or 450, and then we will bounce and continue to form brand new all-time highs. Remember, this is a bull market, and you don't try to call a top in a bull market. It's a loser's game, and although many people try, many people fail continually time and time again because the market just continues to march higher. So if you're staying objective and you're following price action, you need to remain bullish at this time, even though we are due for a pullback. Don't sell out all of your long positions because you're just going to get FOMO, and we still do have more upside in this bull market. If you're trading, lock some profits and get ready to buy the dip. Even though we don't know when that dip is coming, it's obviously going to be very soon because we can't just continue to go up forever. Nothing goes up in a straight line forever and nothing goes down in a straight line forever. So eventually we will be looking for that counter trend move that should take us back to about 453 or 450. So be patient, and we do have FOMC tomorrow, which could bring some volatility, but don't just assume FOMC means we have to sell off because a lot of that is likely already priced in. So continue to stay on the right side of the trade, and if you're getting nervous, just go to cash and get ready to buy the dip. There's no reason to try to short a strong bull market. It's very difficult to do, and if you've been trying to short this entire bull rally, without a doubt you're underwater on your short position and you're probably questioning how you're going to get out of that position. So just avoid the situation completely and don't even bother trying to short this market unless you're very disciplined and you know when to cut your losses. On the NASDAQ 100 triple Qs, we were up 0.42% today, closing at a brand new all-time high and slicing right through that price target at 388. Remember, you need 2 price action closes above the price target before you look for the next price target, but the next price target will be up there at 394. So we continue to see bullish price action across the board in all of the indices, and we still see the bulls taking the elevator up. There's been almost no significant pullback of note this entire bull rally, so it is likely we could be due for a pullback soon. If we do start to pull back, look for the strongest support levels right around 382 and 378, and our 20 simple moving average and strong support level down there at 373. Remember, we're not looking for a very deep pullback here before we get right back on the bull and continue to march to brand new all-time highs. So put more emphasis on support right around 382 and 378. We have the bullish price action and the strong bull trend, and we continue to see price action looking very bullish, staying above that 5 EMA and blasting through resistance level after resistance level. We're going up on decreasing volume, but remember, the bulls take the stairs up. Even though we do have lower volume, we're still taking the elevator up, and that's just indicative that there's no sellers out there, and that's why the price action is having no trouble blasting through resistance. When you start to see strong resistance levels holding up, that means there's sellers at those levels, and then you do want to prepare for that pullback, and we're just not seeing that just yet. On the Dow Jones, we were also up 0.4% today, so it kind of looks like the algorithms were working on the price action, and we did break out and close at another brand new all-time high, closing above that price target at 360. So we see bullish breakouts across the indices, and we're closing at new all-time highs. So again, very bullish price action, and we still have the strong bull trend. The next price target on the Dow Jones is up there at 365, and you now have strong support levels down here at 356, 355, and right around 353. Remember, this is a buy the dip market because we have the very strong bull market. So if we hit any of these support levels and we start to bounce, you can enter more long trades and continue to hold for new all-time highs. We would need to start breaking down below some of these critical support levels like Dow Jones 351 to start reversing the bullish trend, and I just don't see that coming at this time. On the Russell 2000, we also closed at a brand new all-time high, and it's been a long time coming because the Russell 2000 has been going sideways all the way since February. So the Russell 2000 closed right on top of that resistance level just above 234.4, and that does mean we're very likely just cooling off after this monster bull rally yesterday before we go for that next leg higher. So that next leg higher could take the Russell 2000 to our price target up there at 238. So watch that critical price target, because once we hit that level, we could be due for a little bit of a pullback. I think we're going higher than that level, but let's not look too far ahead and let's just take it day by day. The strongest support level will be this breakout level right around 232, and below that we still have support at 229 and 226. I don't expect to see us going back down to 226 just yet. I think we will hit that price target first up there at 238, and I still expect to see the small caps outperforming the rest of the market for the month of November. So remember, I've been calling this for quite a while, and on the Stocks Channel Discord, we've been loading up on small caps well before this bullish rally, and now we're locking in some profits and we're getting ready to hit these price targets. This is a bullish rally, as you can tell from the strong bull trend and the very bullish price action, and you don't get a candlestick like yesterday without a lot of bulls buying and getting ready for a bull rally. So don't get bearish on the small caps just because they're going higher. They've been going absolutely nowhere and just grinding sideways from all the way back in February, and now that chihuahua that's been caged up is starting to break out and people are starting to realize it's a pit bull. So get ready for a very monster rally in the Russell 2000 as it continues to blast out and break out to new all-time highs. On the ARKK ETF, we were down 1.62% today, and this is to be expected because a lot of the ARK ETF has Tesla stock, which we're finally starting to see cool down. Overall, the price action is still above critical support, which is right around 120 in our 50 EMA at 118, so there's no reason to sound the panic alarm just yet. We're very close to having that full bull trend, and as long as the price action is above 118, you can buy the dip on the ARK ETF. If we break below 118, there's a good chance we're going to close that gap at 113. So by far the most critical support level will be that level at 118. You also have support right around 122.6 and 120, which could be other buying opportunities if you do see the price action dipping to those levels. Now to the upside, you're looking for a breakout above 126 to get to 128 and 131. Right now, the ARKK ETF will have a very strong resistance right around 125. And remember, we're looking for this inverse head and shoulders look where we could be due for a pullback, which could form that right shoulder, and that could help us break out and start blasting off to some of those higher price targets. It doesn't mean we have to get the inverse head and shoulders. It's just a very technical pattern that you usually will see. So be on the lookout for another pullback, which could make that right shoulder, and then a monster bull rally, which could break the neckline, and we could start to see a very impulsive rally from that level. On the VIX, we were down 2.3% today, and we continue to see the VIX getting crushed with the price action below all the moving average and the full bear trend. So the VIX is still trending down towards 14, which is still bullish price action for the VIX, because the lower the VIX goes, the higher we expect to see the stock market. We could still see a little bit of a spike in volatility, and we could see the VIX start heading back up towards 18.2, but as long as the VIX is staying below 20, it's just normal volatility and a normal pullback, and you still want to buy the dip. If you see the VIX closing above 20, be cautious of a deeper pullback that could turn into a stock market correction, but right now we don't see that in the VIX, and it tells us to stay bullish in the market. On Bitcoin, we're currently up just over 3.5%, and we do have that full bull trend still, and we did see Bitcoin bouncing off our support trend line right around 60,500. So we're getting a very bullish candle, and we are doing it on increasing volume, so there is a good chance we are going to see Bitcoin break out back above 64,000 and retest the previous all-time high at 67,000. I expect that level to break down, and I do expect to see Bitcoin running to 75,000, and then from that level, we could see another significant pullback. So right now I'm bullish on Bitcoin with the bullish price action and the strong bull trend to get to my price target up there at 75,000. Your critical support level to pay attention to is still right around 59,000 and 56,000, and below 56,000 we could see Bitcoin go into a deeper consolidation. I don't expect to see that, so just pay attention to the price action, and if we break down below 56,000, you need to pull back on the bull horns a little bit and get ready for some more consolidation. On Amazon stock, we were down 0.16% today, and Amazon stock is playing games around the support level at 33.11, which is a very critical support level. Remember, if Amazon does close below this level, there's a very good chance it's going to have a quick trip down to 31.85 or 31.36. However, we did not close below that critical support, so you can't just assume it's going to break. You have to wait for the confirmation of the price action. We could still bounce off this level and go close that gap right around 33.88. And above 34.52, we could break out and go close that gap at 35.80. So the critical support is 33.11, and if we break down below that, you want to look for 31.85 or 31.36. Critical resistance is 34.52, and above that you want to look for the gap close at 35.80. Amazon stock is very easy to trade right now. You just need to be patient and disciplined and wait to see which direction it's going to break out. Jumping over to Tesla stock, we can see that it's still stuck in orbit and hanging out in space, and it's pretty much doing exactly what we expected it to do, and it's starting to form that bull flag. Remember, the most likely scenario is that we're just going to chop around and form some sort of bull flag or triangle look here, and then we will either see a breakout to the upside or a breakout to the downside, and then we'll know which direction Tesla is going from here. There's no reason getting overly bullish on something that's blowing off the top, and there's no reason to get overly bearish on something that just continues to go higher. So right now, if you're not in Tesla stock, you're much better off just being patient and waiting to see which direction it's going to break out. And if you're in Tesla stock, just continue to hold it because you never know how high something like this can go. We're still going up on increasing volume, so the volume and the price action are still looking incredibly bullish. And we already know with the blow off top that we have the very strong bull trend. So right now, just look for Tesla to consolidate above 1080 and below 1240, and then we will eventually see a breakout of one of those levels, and that will set the direction of the next trend. Remember, if we break out above 1240, the next price target I have is all the way up here in space at 1412, and that will very likely be a very critical, important price target. So if we do get to that level, I would definitely be looking for a much deeper pullback from that level. However, right now, I still think we're going to ping pong around and form this bull flag and eat up some time off the clock as some of these moving averages catch up to the price. That's going to absolutely destroy put options and call options alike. So if you're trading Tesla stock, you should not really be messing around in the options market. Either stick to shares or just take it off your watch list and wait till this thing consolidates. On Apple stock, we were up 0.71% today, and we are seeing Apple stock with the full bull trend today. So Apple is looking very bullish with the full bull trend and the price action back above all the moving averages, but we still do need that confirmation breakout back above 151. Above 151, I think it's very likely we're going for a new all-time high, and we will have resistance on 157 on the way there. The new all-time high price will be 162, so wait for that breakout above 151, and then you can get a lot more bullish. Your critical support levels are still 148 and right around 146.5, and below 146.5 we're very likely rolling over and more than likely going down to close that gap at 137. So as long as Apple stock is above 146, stay bullish because you have the full bull trend and you can buy the dip off support. Look for that confirmation of that bull breakout and then a very likely run all the way up to new all-time highs. On the financial sector, we continue to see bullish price action and the very strong bull trend. The industrial sector still has full bull price action and a very strong full bull trend. The healthcare sector still has bullish price action and we're very close to regaining the full bull trend, so the healthcare sector is getting back on the bull. The energy sector was down about 1% today, but we still have the full bull trend and the price action is still above a positively sloping 20 simple moving average. So jumping back over the S&P 500, all of the sectors are still looking bullish and there's no reason to get bearish just because the stock market is going higher. We're definitely due for a pullback, so lock in some profits and get ready to buy the dip, but don't just sell all of your long positions because you think the stock market's going to crash. This is a strong bull market, and across the board we're breaking out and forming brand new all-time highs, and that is what you see in a secular bull market. We wouldn't see the small caps breaking out and closing at a new all-time high if this was not a secular bull market. So believe me when I tell you this is a strong bull market and this is a market you will want to buy the dip in. Unsubscribe from fear mongering because it's not going to help you be a better trader. It's just going to scare you and make you more emotional. And when you get emotional, you're going to make bad trading decisions. If you're shorting this market because you're scared, you're just going to eat up your profits. So just go to cash and be patient. And remember, if you go to cash, you don't want to FOMO in at higher prices. If you're going to cash, it's because you're going to be patient and you're going to wait for that pullback buying opportunity, even if it takes 1 to 2 months for that to happen. Remember, I do have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and I am currently running a 50% off promotion code for your first month. If you're interested in trying out BANC Trade Alerts, you can find out all of the details and how to join by clicking on the link in the description. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly, and we are absolutely crushing this market. If you're interested in joining the Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.